Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world, and today's filing might just leave you scratching your head wondering if it's a health company or a pet supply store, or both. It's SRX Health Solutions, and we will look at their Form 8K, a current report with a lot happening from mergers to leadership shuffles, so let's dive in. This report is all about a big change that happened on April 24, 2025. A company called Better Choice Company Inc. essentially took over SRX Health Solutions Inc. in a reverse merger. This means that SRX Health is now running the show, even though technically it was acquired. Think of it like this: a smaller company swallowing a bigger one and then changing its clothes. The company changed its name from Better Choice Company Inc. to SRX Health Solutions Inc. So Better Choice is out, SRX Health is in. SRX Health Solutions Inc. is the new name. Because SRX Health is considered the acquirer in this reverse merger, their history and operations are what really matters from now on. Better Choice's history is, well, history. To make it happen, they created AcquireCo to do the acquisition. It is a wholly owned subsidiary of Better Choice. Then they issued a bunch of shares, over 8 million to SRX Health stockholders. Then AcquireCo itself issued almost 20 million shares. These can be exchanged for SRX Health shares later on. The result, SRX Health's people now control 84% of the voting power. They also did a private placement where they sold more shares to an investor to raise almost $9 million. This means the ownership structure changed significantly. After all of this, here's what the company looks like in terms of ownership as of closing of the merger. 14.3 million common shares, warrants to buy 3.1 million shares, and 19.7 million shares that can be exchanged later. Because of this reverse merger, SRX Health's business is now the company's main gain. It seems the pet health and wellness business conducted by Halo is no longer their primary focus. Best Health runs a healthcare network across Canada with pharmacies and clinics. They're all about specialty drugs, which are very expensive medications needing specialized care. This network includes doctors, pharmacists, nurses, and even clinical trials sites. S Health made about $161 million CAD in revenue last year, with about $11 million CAD in adjusted profit. Not bad at all. To grow, SRX Health plans to buy more pharmacies, use its existing network to grow, expand distribution, invest in technology, and increase clinical trials. They also have a wholesale distribution business which is accredited by Health Canada. They are trusted to adhere to all guidelines and quality controls. Now comes an area with intensive barriers to entry. SRX Health's pharmaceutical company partners focus on establishing synergistic relationships with proven wholesale and distribution partners. Specialty pharmacy is a growing sector. By 2026, specialty drugs are expected to account for over half of all insurance plan submissions. That's a huge jump. S Health is also doing patient support programs which aim to guide patients through the healthcare system. This could give them an edge when new specialty drugs launch. SRX Health had some trouble with a regulator in Saskatchewan in 2022 due to billing issues, paid some fines, and repaid overbilled amounts. And it's all resolved now, so no big deal. Halo is a pet health and wellness company focused on dog and cat products, including foods, treats, dental products, chews, and supplements. You can find more at halopets.com. In 2024, Halo's gross sales were $42.4 million. Most of this came from online sales and international sales. Their presence in Petco is not as big these days. Halo has a win from anywhere work culture, a flexible and entrepreneurial working environment for long-term success. If Halo wants to sell pet food in China, they need to comply with Chinese safety and hygiene regulation. And now let's get into the risks. These can make or break a company, so it is important to look at them before investing. The company itself admits that there is doubt. There's substantial doubt about the company's ability to continue as a going concern. This is never good to hear. It means they might not have enough money to keep operating. A lot hinges on Adesh Vora, the executive chairman. If he leaves, it could hurt the company badly. S Health works in a highly regulated environment. Pharmacy regulations in Canada are tough. Reimbursement programs and drug prices can change. If the government decides to pay pharmacies less or changes drug pricing, SRX Health's profits could drop. The pharmacy industry is competitive and consolidating. They need to watch out for competitors and keep up with technology. Product liability is always a risk for pharmacy. If something goes wrong with a drug, they could face big claims. A variety of things could interrupt their operations and affect their operating results, which could affect SRX Health's finances. Also, some of SRX Health's directors have outside business interests, which could lead to conflicts of interest. And also, Halo's success depends if they're able to sustain their brand by offering recognizably superior products. Halo also faces competition from bigger competitors that may have greater financial resources. If they screw up, their suppliers could be in trouble. It may materially impact Halo's ability to market Halo's products. The company also tells us who is on the board and if they are independent or not, which is a required and good practice for a public company. The 2024 compensation for executives and former executives are also disclosed. Compensation consisted of base salaries, bonuses, stock awards, and option awards. That was a pretty wild ride through this 8K report. So here's my opinion. SRX Health is trying to move into the specialty pharmacy space, and that is a complex and heavily regulated environment. While there is a large potential for the business to expand, the company's history of financial losses raises some red flags. Add to that the risks in the retail businesses as highlighted with their Halo brand, and this report makes for an interesting but risky prospect. What do you think? Let me know in the comments. Subscribe to Corporate Decoder for more videos.